The opportunity present with AMD's stock is starting to get very interesting. And now with NVIDIA announcing their earnings in the last week, we are seeing continued clear divergence between NVIDIA's performance and AMD's performance. So in today's video, we're going to take a look at these differences between AMD's earnings and NVIDIA's earnings, as well as go over potential price targets for this stock and which opportunity I think is actually better in the market. This year, we put a stretch goal on where we would like to be with this channel by the end of the year in terms of subscriber count, and so far we are basically right on track, which is really awesome to see because oftentimes the start of the year is a little bit slower than the back half of the year. So thank you guys so much for the continued support. If you are enjoying the videos on the channel, make sure to drop a like down below. It really helps promote the videos out there, and subscribe for more videos like this one. And you know that we have to keep you updated on the YouTube portfolio. This is the portfolio that we track across the videos on this channel, and right now it's sitting at a value of $61,890.57, down a little bit from its all-time highs of just over $66,000. And there are two main reasons we are seeing this drawdown in the portfolio. The first has to do with a general sell-off in the market. This is due to fears around tariffs and potentially affecting companies' revenue and earnings. The second reason that the portfolio has fallen in these recent weeks has to do with Supermicro. They came out and announced that they are staying listed on the NASDAQ, and what that ultimately led to is a lot of investors betting on this short-term event have actually exited their positions on this company. That has caused it to fall from around $60 to $41, and now our return is only 30% compared to the 170% that we were seeing. In my opinion, this stock is still undervalued. You can check out some of my videos around Supermicro on the channel, and I go over my thesis around this company. I think that it has a lot of runway, potentially up from this $40 price. So I'm going to hold it for now and kind of see how things play out. Within this portfolio, I also hold Alibaba. This has been a winner in the last couple of weeks. We've seen it run up very quickly to around $130 per share. Google has sold off a little bit. Right now, we're up only 1% on this position. I could potentially add to this position because it is a very small one, only $850. I also have Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. If you've been following the channel for a while, you know that I hold two dividend ETFs, SCHD and VYM. SCHD, I plan to sell out of at some point during this year, and I think that is getting a little bit closer. We are seeing some weakness in the market, and I think that opportunities could be coming up here in the next month or two as the market could potentially continue to sell off. And with that, we have actually seen SCHD recover a little bit as investors have left some more speculative plays and actually filtered their money into dividend stocks. On top of these two positions, I also have a decent cash pile of around $13,500. However, today we are going to be talking about a stock that I don't own in any of my portfolios, and that is Advanced Micro Devices, better known as AMD. AMD in the last 6 months is down by almost 30%, and over the last year now, they are down by almost 51%. However, this is a company that is very used to large drawdowns. Back in 2021 through till 2022, they saw a drawdown of almost 64%. And this weakness in AMD's stock price is despite the fact that the market that they compete in has been very hot over the last few years. The number one player in this market, in the data center market overall, GPUs, CPUs, all of that is none other than NVIDIA. And over the last 5 years, NVIDIA is up over 1,700%. However, keep in mind, back in 2021 through till 2022, similar to AMD, this company saw a drawdown of around 64% as well. However, the major difference between these two companies is what they have done since this time period. NVIDIA in particular has been able to grow their top and bottom line numbers by significant margins in the last couple of years. In just the past week, NVIDIA announced their earnings, and they put up revenue of $39.33 billion versus expectations of $38.05 billion. They also beat on EPS numbers, reporting 89 cents of adjusted EPS compared to 84 cents for estimates. And on top of that, the company provided positive guidance around their first quarter, expecting a significant ramp up in sales of their Blackwell chips. NVIDIA reporting $39.33 billion of top line revenue equates to growth of almost 78% year over year. For me personally, I was expecting expecting their revenue to slow down more significantly and growth rates to fall to around 50 to 60%. So for them to come through with almost 80% growth on their top line year over year, that is a massive win for Nvidia and shows a lot of continued strength in the data center market. When you first hear this number and hear about the strength that Nvidia is seeing in their top line numbers around data center growth, you may think that this is a positive thing for AMD. However, it is just the opposite, because AMD this past quarter reported $7.65 billion. That is only up 24% year over year. So there is an obvious difference when you look at the top line growth rates of these two companies. Nvidia is growing by almost 80% and AMD is only growing by 25%. But it gets worse when you look at specific numbers as well, because data center revenue for Nvidia came in at $35.6 billion, which is up 16% quarter over quarter and 93% year over year. If AMD were competing well in the data center market, you would expect them to have a higher growth rate compared to Nvidia due to the fact that the revenue from this segment is only $3.9 billion. That is almost a tenth of what Nvidia is seeing. However, the problem comes when you look at their growth rate, because they are only up 69% year over year in terms of their data center revenue. However, this is more of the bearish take on these two earnings announcements. If you look at the announcements between Nvidia and AMD, you can see some bullish things presenting themselves in what Nvidia actually announced. Because if you look closely at their gross margin, they have seen a decline year over year. In Q4 of 2024, they had a gross margin of 76%. However, in Q4 of 2025, that number has fallen to 73%. What this tells me is that Nvidia is having to bring down their margin slightly to stay competitive in the data center market. The company is claiming that this decline in gross margin is due to newer data center products that are more complicated and expensive to produce. However, if that really were the case, they could maintain the same margin and just pass those costs along to the customer. However, they are clearly not doing that because there's additional competition in the market and they don't want to price themselves out of some customers. The positive for AMD is they are seeing just the opposite. Their gross margin this most recent quarter actually increased by 3% on both a GAAP and a non-GAAP basis. It went from 46 to 49% on a GAAP basis and 50% to 53% on a non-GAAP basis. What this means is if AMD wants to compete more with Nvidia, they could actually take the same tactic that Nvidia is doing. They could drop their prices and that could actually lead to some additional revenue coming in. However, their gross margin will suffer in the short term. And in my opinion, that strategy is the one to take for AMD, because right now there is no clear number two player in this market. So if AMD steps up and lowers their margin and tries to capture more of this market, it may hurt EPS numbers in the short term. However, long term, it may prove to be a better strategy. Right now, EPS estimates for 2025 are sitting at $4.71 with low estimates of $4.05 and a high estimate of $5.80. I said around a month ago that the valuation of AMD started getting interesting under $100, and we are starting to see the potential of that unfolding. Right now, AMD's forward PE ratio is sitting at 21.69. This is basically in line with the S&P 500. However, AMD is much more of a company in the NASDAQ that has a higher growth rate than most of the S&P 500. Keep in mind that a forward PE ratio of 21 is based off average EPS estimates for next year. That means that they are based off $4.71 for 2025. In my opinion, AMD should be trading closer to a 25 to a 30 PE ratio, which means that the stock right now is undervalued because these valuations would place the price around $117 per share to $141 per share. So based on average EPS estimates, right now the stock appears to be a little bit undervalued. However, you want to build in some margin of safety. So let's take a look at the low EPS estimate of $4.05. That would mean that the stock currently has a forward P ratio of around a 25, which means the stock right now is basically fair valued at around $101 per share. However, if we see this lower growth, the market may price in a lower valuation of closer to 20, which would drop the stock price down to $81 per share. So when I'm looking at AMD, I want to see some margin of safety built in on top of these numbers. What that means is I think around $95 per share. That is a good time to start entering into this company, because what that allows me to do is even if it continues falling to this $80 mark, then I can average down along the way. And then it also leaves plenty of upside if AMD were to outperform, because remember, outperform EPS estimates are $5.80. That would put the current forward P ratio around 17, which at that point, I think that AMD could easily justify a forward P ratio anywhere between a 30 and a 35, which means the price of the stock could go up to anywhere from $175 per share to $203 per share. And for me personally, when I'm looking to invest into a company, I want a clear path to how that company's stock price could double over the next 2 to 5 years. So when I'm looking at AMD and this range of around $100 to $80 per share, there's a clear path on how AMD can actually perform in terms of their earnings to present an opportunity to double up on the stock price. But keep in mind, that is all my opinion. Don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, thank you guys again so much for the support on the channel. If you do enjoy these type of videos, make sure to subscribe down below and drop a like. It really helps the channel out. Thank you guys so much for watching and have a wonderful rest of your day. And for the joke of the day, did you hear the one about the claustrophobic astronaut? Check the comments down below for the answer. Thanks for watching.